Passive income and dividend investing has surged in popularity over the last 3 years. And with the dream of living off your dividends, everybody wants to be a dividend investor these days. So today I'll be sharing 3 dividend growth stocks with not only yield but also growth over time so you can compound your wealth. These are 3 stocks that I actually own myself in my own portfolio, and if you want to see if I'm buying or selling them every month, make sure to subscribe because I post portfolio updates every month and we'll be posting one very soon. With all that out of the way, if you're new to the channel, my name's Ryan. I'm 17 years old. I do dividend growth investing for the long term. It would really mean a lot to me. My goal by the end of the year is to reach 1,000 subscribers, and we're at like 578 right now. So it would mean a lot if you could help me reach my goal if you could subscribe. With all that out of the way, join the Discord link in the description, and of course, roll the intro.
Hello, I like money.
Now, for the first of the 3 stocks that I'll be going over today is Microsoft, stock ticker MSFT. If you know me and you're in the Discord, you know that I love Microsoft. It's arguably one of my favorite companies in the world. In fact, I just made a video last week, the link to that will be in the description, on Microsoft and how they'll rule the gaming industry over the next 10 years. It's one of the highest quality videos that I produced yet in this channel's history, in my opinion, and it really goes in depth on how Microsoft is able to, monetize their gaming business and how, in my opinion, they'll take it over the next 10 years. But let's move on to Microsoft stock. Right now, Microsoft is not typically considered a dividend play when it comes to a stock, as their yield right now is only 0.95%. They're currently trading at a PE ratio of 30.59, which is just around fair value with the growth potential and the assets that Microsoft has and all their business segments. Microsoft has been on a tear recently when it comes to the stock price, as they're currently trading at $286.14. I was lucky enough to buy under $250 and build up a majority of my position then when they were on a dip and out of favor by the market. Over the last year, they're up 2.25%. As I mentioned, when it comes to Microsoft and their valuation, 30.59 PE, that's really expensive for a lot of people. But for me, with Microsoft, again, one of the highest quality companies in the world, monopolistic features, you need to pay a premium for that, in my opinion. And 30.59, I think anything right around this range is fair price. Microsoft has been growing their dividend for the last 18 years straight. As Microsoft over the last 5 and 10 years really growing their business and expanding well, I think that dividend growth is sure to accelerate. Microsoft pays an annual dividend of $2.72. As I mentioned, they're currently trading at a pretty low dividend yield of 0.95%, and they have a really healthy payout ratio of 28.51%, so they're going to have plenty of room to grow that dividend in the future, and it's definitely safe and sustainable dividend at the moment. And if you expect Microsoft to continue to grow their business in the future and grow their free cash flows, that dividend will definitely be growing in the future. Microsoft also does share buybacks, which is another way that they reward shareholders. Microsoft dividend growth is one of the most appealing parts of the dividend for me personally. They have a 5-year dividend growth rate of 9.92%. Their last dividend hike was 10%. They have a 1-year dividend growth rate of 10.17%, a 3-year dividend growth rate of 10.25%, a 5-year dividend growth rate, as I mentioned, of 9.92%, and a 10-year dividend growth rate of 11.7%. So overall, just really great, consistent dividend growth, high quality dividend growth as well. Financially, they're also as strong as the company can really get, with great free cash flows and a very profitable business model. Moving on to our next stock. For our average yielding dividend stock, we have PepsiCo, stock ticker PEP. One share of Pepsi right now is trading at $183.51. Over the last year, they're up 6.75%. PepsiCo sells food and snack brands. They also sell drink brands. They have brands like Ruffles, Frito-Lay, Pepsi, Doritos, Cheetos, etc., and tons of brands that are consumed by millions and thousands every day. Pepsi is a more mature company with stable free cash flow growth. Right now, one share of Pepsi, you are going to be paying a premium. Their PE ratio of 25.28, which in my opinion for a company like Pepsi, they don't have rapid growth like Microsoft, and just overall a more mature company as Pepsi is. I think that is a little expensive right now. They're trading at the same PE levels right now as, Apple. So I think it is overpriced right now, but there is a premium in this market. Right now in the current market that we're in, investors want safe and stable positions. So companies like Procter & Gamble, more defensive companies like Pepsi, Procter & Gamble, companies like those, Coca-Cola, they're going to be more favored right now. There's a premium on those. So it's likely when there's another bull market, these stocks will be a little cheaper. So right now might not be the best time to buy a PepsiCo, but it is a long-term holding that's a great holding for sure. When it comes to rewarding shareholders, Pepsi also does share buybacks. They've been growing their dividends straight for the last 50 years straight, which is incredible. They have a 5-year solid dividend growth rate of 7.39%, a payout ratio that's a little higher at 66.64%, but obviously as the more mature company that Pepsi is, that payout ratio will be a little higher, as they don't really need to reinvest back in their business, and currently they have a dividend yield of 2.51%. Pepsi's dividend growth has also been solid, with a 1-year dividend growth rate of 6.53%, a 3-year dividend growth rate of 6.39%, a 5-year dividend growth rate of 7.39%, and a 10-year dividend CAGR of 7.9%. Nothing crazy, nothing like Kroger, Lowe's, etc., but still solid and consistent dividend growth. Combine that with their strong financials, the maturity of the company overall, the defensiveness that they have, the high-quality brands and economic moat that they possess. Pepsi is an amazing company to own for the long term, but with their valuation right now, you might want to hold off on buying until it dips again. And the third and final stock that we'll be going over, which is our high-yielder position, which is, of course, Altria, stock ticker MO. Currently, Altria is trading at $45.03, and over the last year, they're down 18%. They have gotten beat up a little bit. Now, out of all three of the stocks that I put on this list today, I would definitely say that Altria is the quote-unquote riskiest, even though I think that risk is overblown by a lot of the media and investors in general in the stock market community. Microsoft was trading in the high 50s and low 50s, but then when that Juul announcement, the FDA would try to ban it from the U.S., it wasn't obviously good news, and it was an overblown sell-off in my opinion. Altria obviously is trading at a discount right now because of the natural. It's a sin stock, so naturally they're gonna be trading at a discount. Currently, they're trading at a P ratio of 8.9, so it is really good value right now for their earnings. And while the legalization of weed has been, really ramped up in the last couple of years in the U.S., Altria is taking advantage of that as well. They have investments in multiple companies in the cannabis industry. Altria is currently trading at a pretty high dividend yield of 8.35%, but while a lot of people think that a yield that high would be unsafe, you would be incorrect. Altria has strong brands right now with great pricing power, and they have very addictive products and are taking advantage of new waves in the vaping and cannabis industry, as I mentioned. As somebody is in high school, I would definitely testify this. Whenever I walk into the bathroom, let's just say I hear a little cha-ching in my head with that Altria dividend. Now, let's talk about that Altria dividend. A lot of people, as I mentioned earlier, think that it's unsafe, that it's farther from the truth. If you actually looked at Altria's financials, they are financially a very strong company, and right now they can support the dividend with their growing financials. As I mentioned, their dividend yields at 8.35%, and they have a payout ratio of 76.03%, which, while it is on the higher side, they do distribute a lot of their earnings back in the form of dividends and share buybacks. They said in their recent earnings report that their goal is to have an 80% payout ratio. For the longest time, everybody's saying that Altria is going to fall out of business and they'll have to cut their dividend, but they've been growing their dividend for the last 53 years straight through recessions and bear markets. Did I also mention that Altria just recently announced a new share buyback program as well? Yeah, they also like to reward their shareholders as well in the form of buybacks and dividends. Let's talk more about their dividend growth. They have a 5-year dividend growth that is 7.18%. They recently, along with that share buyback news, they also announced a dividend hike of around 4%, which again for Altria is very solid considering that their payout ratio is higher. They're trying to keep that payout ratio at 80%, as I mentioned. A 3-year dividend growth rate of 3.86%, a 5-year dividend growth rate of 7.18%, and a 10-year dividend growth rate of 7.96%. So obviously, Altria is committed to paying and growing that dividend over the long term. Right now, in the mid-40s, I think is a fair price to pay for Altria with the risk that they have. I wouldn't dump like 10% of my portfolio into it, but I think it is still worth having as a sizable position in your portfolio for that juicy dividend yield that you'll be getting and the value that they present. And that, my friends, is the end of the video. If you made it to the end of the video, I really do appreciate it. It does really help me a lot, help me reach my goal of getting monetized by the end of the year. If you want to help me out even more, share the video with somebody, a friend or family member you think would find it valuable. And of course, thank you for watching. Do dividend stocks, not drugs. Have a good one.